Hello and welcome to the April 28th, 2023 episode of Watching the Tape. Tax preparation season is over for the vast majority of you out there. Now it's tax return review season. Many of you may have seen this letter that I sent out earlier in the week calling for your tax returns. If you didn't get this letter, my apologies. You can still send us your tax return so we can stay up to speed on your individual tax situation so you never miss an opportunity to take the most tax efficient route possible. Remember, it's not about mindlessly deferring taxes. It's about reducing your lifetime tax bill. So how can you get us your tax return? Well, you can upload it to your HFG Trust online portal. You can email it to us. You can drop it off. Please say hello if you choose that option, or you can even mail it to us. That works too. The first thing we'll do when we get your tax return is load it into our tax planning software, Holistiplan, which instantly converts your tax info from a black box calculation into something that any of us can easily understand. Let's walk through a simple example now. Here we have the tax report for Johnny and Jenny Davis, a married couple in their 40s. We'll start by looking at the key figures table at the top. They earned total income of $202,000 in 2022. They took a standard deduction of $25,900, leaving taxable income of $176,100. Their ordinary income put them in the 22% tax bracket. Their average tax rate was 14.3%. Let's take a closer look at where they fell in the ordinary tax brackets and capital gains tax brackets. First, their ordinary income was $161,000, which is their total income less their capital gains or qualified dividend income. In the case of the Davises, they had qualified dividends of $15,000. The 22% tax bracket in 2022 ranged from $84,000 to $178,000. So they were towards the higher end of that range, but they were not quite knocking on the door of the 24% tax bracket just yet. Moving down to the capital gains tax bracket, this bracket is based upon taxable income, which does include capital gains and qualified dividends. So this is the $176,100 figure that you might recall from the key figures table above. There, $15,000 of qualified dividends were taxed at 15%. The 15% tax bracket ranged all the way from $84,000 to $517,000 in 2022. Let's jump over to the modified adjusted gross income tiers table. This section gives answers to questions we typically hear. Can either or both of us contribute to a traditional IRA? Can we contribute to a Roth IRA? Do we still qualify for college expense-related tax credits? In the case of the Davises, they can contribute to Roth IRAs, but they can only contribute to a traditional IRA if they're not covered by a qualified retirement plan through their employer. And unfortunately, they earn too much to qualify for any college education-related tax credits in 2022. Next up, capital gains and losses. It's really straightforward for the Davises. They realized a net long-term capital loss of $10,000 in 2022, of which they used $3,000 to offset ordinary income, leaving them a carry-forward loss of $7,000 to net against future capital gains and ordinary income. You definitely want to be sure you don't lose track of any of these loss carry-forwards. Lastly, my favorite part, the observations section. If you do nothing else, read through the observations when you get your report. It is a fairly short list for this made-up couple, the Davises. I would imagine that your list of observations will be a little bit longer than this and could potentially be quite helpful. So there you have it. That was a simple example of a Holistiplan tax report. I will share your tax report with you when it's complete. And your tax situation may very well have a few more layers of complexity to it than our example here. And that's what makes this software and this exercise so valuable. But like I said, it's important to stay on top of your tax matters so you don't miss any good opportunities to be more tax efficient. That's it for this week. Thanks for watching. We'll see you in 2 weeks.